Botra, as always. Kunal, let me come to you. Siddharth, great having you after a very long time. We're chatting. But Kunal, let me come to you with regard to the market. Uh, the morning was dominated by weakness in IT, and that is what was spilling over on the index. Now we've seen the IT index recover, but we've seen some of the other sectors start to weaken and weaken very, very sharply. What do you make of this, and what's playing out?
Yeah, it's a little intriguing to watch because the falls on the back of the IT index going to a correction, and we've seen the correction being a little bit more on the intense side in the last 8-10 days, almost like a 20% cut for the IT index and a 20-25% kind of a cut for individual stocks, large caps and mid caps within the IT pack. But again, the mixture of the markets today indicate that the large cap names likes of Reliance, ICICI Bank, HDFC Bank, etc. These are the kind of stocks which have taken a turn for themselves on the downside. Again, I think what's interesting is to see is that names like Reliance, etc., they've managed to break their 200 DMAs after today's price action move. So, which means that we could be looking at a point where the markets would just about wait for these large cap stocks in case if there's any kind of a further sell-off. The only shining light over here is that the Nifty is holding on to 25,500 mark. That's been the huge support for the index in the last 7 days. Even last week or so, we managed to retest 25,500 mark, and from there we bounced off. So that's the only positive aspect. But the concern is that the large cap names like Reliance, HDFC Bank, etc., if the stock starts to show signs of further weakness, then maybe the support could be breached on the downside.
Okay, so that's the market on the technical and that take on Reliance. But Siddharth, hi, good afternoon. Good to be chatting with you. Talk to us about how you are seeing this subduedness that we've been seeing for back-to-back days in the market now. What could be the reason? Because like Harsh mentioned, IT today has recovered, but there is an overall sense of negativity in the market. Amid a market like this, would your approach be to wait and watch, or are you looking at buying the dip? And if so, where would you be placing your bets?
Yeah, good afternoon to all of you. I think if you look at the market construct, we are at the fag end of the Q3 result season. And what we have seen is that the result season more or less have been in line with our expectations. There have been a few misses, but largely a lot of companies, they have reported in line to better than expectation numbers. Key overhang for Indian equity markets was the US-India trade deal, which now seems to have been almost ironed out. The actual signing of the deal is yet to happen, but I think that changes the FI perspective on Indian equities to a large extent. So what we expect is going forward confluence of several factors which should construct positively for the Indian markets. The India-US trade deal having been ironed out, so the overhang of FI selling, that should go away. The earnings bottoming out and recovering from here on, that should also help, especially given that the third factor, which is that market has been consolidating for the last 18 months. And we have seen that now valuations are at par or marginally below the 10-year average on a 1-year forward basis. So all this put together, we believe that while for the next few quarters, Indian market should gradually see an uptake and give a return of about anywhere between 15-20%. The challenges do remain from the global front. We get a lot of news flows. The US interest rate, I think that becomes a key factor. We had heard the announcement of the new Fed chair and the market reacting negatively to that. Again, we saw some of the macro numbers coming in on the US side. That is a key factor. Plus, I think the geopolitical issues that keeps erupting in between once in a while. And finally, the latest is the AI-led disruption that creating volatility in some of the segments of the equity market. I think that intermittent volatility cannot be ruled out in the near term.